Hey, hi everyone, and welcome to today's webinar on how to succeed with California Work Comp in 2026. My name is Alexa Hill, and I'm the marketing manager here at CID. Today we have Darby Fisher, CID's Work Comp underwriter, sharing her expertise and diving deep into the California Work Comp market for you. And then, as you can tell, you are all muted, but there is a chat feature where you can type in your questions, and we'll answer them throughout the webinar. Your voice is important to us, and we want to make sure that all your questions are answered, so please feel free to chat them in at any time. Here are our 5 objectives for our webinar today. Darby is going to go over the current conditions of the California work comp market. She's going to identify key factors impacting the California work comp market. She's going to analyze how the market changes are affecting underwriting, evaluate loss trends and patterns to improve claims prevention and risk management, and also learn the best practices for succeeding in writing workers' comp. So without further ado, I will pass it off to Darby.
Good morning, everyone. So for now, we're going to be discussing the current conditions of the work comp market in California. So while California workers' comp remains fundamentally sound, rising claim costs are driving rate increases and stricter underwriting, signaling a shift in the market. After multiple years of favorable results, the California work comp market is tightening as loss costs rise and margins compress. So medical inflation, higher wage levels, and increasing claim severity are pushing overall loss costs upward. Certain industries are seeing more frequent and more expensive claims, and per the insurance commissioner Ricardo Lara, after more than a decade of steady or decreasing rates, data now supports an increase in the average pure premium rate. So this past year, there was a consensus among actuarial experts that costs are rising and a meaningful increase in the average pure premium rate is justified and supported by the data. The average approved pure premium rate is 8.7% above the average approved September 1st, 2024 advisory pure premium. So the WCRB pure premium rate filings reflect upward adjustments as carriers seek to offset deteriorating loss trends. In turn, carrier appetites are becoming more selective. So insurers are tightening underwriting, focusing on loss history, safety controls, and industry exposure, while poorly performing accounts are facing higher pricing and or non-renewals. As such, there is a growing focus on risk management. So employers with strong claims management, return to work programs, and safety cultures are better positioned to mitigate increases. Cost pressures are reshaping price, underwriting, and renewal outcomes. So throughout this webinar, I'm going to be discussing some key factors of the change, the cause and effect, some claims patterns and prevention, along with key takeaways of how to succeed and where to place your focus. So some key factors affecting the workers' comp California market today. So California continues to be one of the most complex and challenging work comp environments in the country. So it is important to identify the key major drivers shaping underwriting decisions, pricing, and carrier appetite, and why these factors matter now more than ever. So first, loss severity continues to rise, particularly on the medical and indemnity side. Medical costs per claim in California are increasing faster than national averages due to higher hospital charges, greater use of specialists, and more expensive procedures. At the same time, indemnity benefits rise with wage growth and minimum wage increases, directly impacting reserves and overall claim costs. So while claim frequency has remained relatively flat, industries like construction, transportation, and healthcare continue to see higher claim activity, and California's elevated number of cumulative trauma claims adds complexity, duration, and cost. Second, legal and litigation exposures remain significant. As I'm sure you all know, California is a highly litigious environment with attorney involvement common and legal costs often high and unpredictable. In addition, statutory presumptions and evolving court decisions increase carrier liability, making claims outcomes less certain. Third, industry and class-specific risks plays a crucial role. High-risk industries such as construction, trucking, warehousing, healthcare, maybe even manufacturing, they carry greater severity and litigation potential, while lower-risk industries like professional services and tech generally perform better. So accurate classification and historical loss experience are heavily weighed in underwriting. And finally, market conditions and rate adequacy are under pressure. Although advisory rates are increasing, combined ratios for many carriers remain above 100%, reinforcing the need for disciplined underwriting and pricing that reflects today's severity and legal cost trends. So, together, these factors explain why underwriting in California currently requires heightened scrutiny, strong loss control, and careful pricing to maintain long term profitability. So, across the workers' compensation marketplace, we're seeing a clear shift driven largely by regulatory change. States have expanded benefits, broadened compensability standards, and implemented presumptive coverage laws, all of which have both increased claim frequency and severity. And at the same time, medical and wage inflation are driving higher indemnity and longer claim durations. So the cause and effect is pretty straightforward. Higher mandated benefits and less predictable claim outcomes have led to rising loss costs, which in turn are forcing the carriers to pursue rate increases. As regulators apply greater scrutiny to rate filings, carriers are responding by tightening underwriting discipline and limiting pricing flexibility. At the underwriting level, this has resulted in stricter adherence to filed rates and fewer discretionary credits. So credits are applied if they are clearly supported by measurable loss improvement, documented risk controls, and proven claims management outcomes. Ultimately, regulatory pressure, adverse loss trends, and rate adequacy concerns are reshaping how workers' compensation is currently being priced. The market is becoming more disciplined, data driven, and consistent, placing greater emphasis on loss performance and risk management than ever before. So, we're going to go over some claims patterns to better understand what is going on currently in the marketplace. So, rising claim severity is materially impacting the workers' compensation industry and increasing underwriting risk across all sectors. So, delayed treatment, cumulative trauma, injuries, and the growth of mental health and PTSD related claims are driving longer claim durations and higher medical, indemnity, and medical legal costs. So, as claims become more complex, adjusting expenses rise and loss predictability declines. That places additional pressure on carrier profitability and rate adequacy. From an underwriting perspective, these trends translate into tighter pricing authority and an increased scrutiny of loss experience. However, success in this environment is still achievable. Employers that focus on early injury reporting, timely and appropriate medical treatment, and proactive claims management consistently outperform the market. Strong return to work programs, ergonomic and cumulative trauma prevention, and maybe even integrated mental health resources can help control severity and shorten claim duration. So ultimately, underwriters are currently looking for evidence, not promises. Organizations that can demonstrate measurable loss improvement, effective risk controls, and disciplined claims practices are best positioned to navigate the current market, mitigate underwriting risk, and achieve more favorable outcomes despite the current tightening conditions. So, claims prevention. In today's work comp market, claims prevention is one of the most effective ways to manage costs and underwriting risk. Rising claim severity and longer claim durations are driving tighter underwriting and reduced pricing flexibility across the industry. So, organizations with strong safety culture, consistent training, and effective ergonomic and injury prevention programs experience fewer claims and lower severity. When those efforts are paired with early reporting, proactive medical management, and a structured return to work program, claim duration and indemnity costs are significantly reduced. From an underwriting perspective, these practices demonstrate measurable risk control and improved loss performance. And in a disciplined market like we are today, employers that can prove prevention and effective claims management are going to be best positioned for more stable renewals and long-term success. How to succeed in the current marketplace. So success in today's workers' comp environment requires a more intentional and proactive approach. It begins with a strong risk selection and pricing discipline. Accurate, accurate payroll reporting, proper job classifications, and realistic pricing aligned with exposure are essential to underwriting risk and supporting long-term program stability. So carriers are focused on risks that demonstrate consistency, transparency, and predictability. Equally important, partnering with our agency, CID, on insured risk management. Through proactive safety support, claims prevention strategies, and early intervention, we can help partner insureds with carriers that help to reduce claim frequency and severity, outcomes that directly influence underwriting confidence and renewal results. So those accounts you guys come across that have an high XMOD, potentially claims frequency or severity issues. We do have markets that will write high XMODs up to 200%. So we can help pair those insureds with carriers that do provide loss control services and claims management to help better the insured's safety prevention plan in place. Finally, educating insureds on audit requirements is also critical. Understanding audit expectations, maintaining documentation, and ensuring payroll accuracy helps avoid unexpected adjustments, supports underwriting integrity, and stabilizes workers' compensation costs for your clients. In today's market, disciplined pricing, strong management, risk management partnerships, and insured education on the foundation are the foundation for sustained success. So what it takes to write work comp successfully in today's market. Writing workers' compensation successfully in today's market requires more than competitive pricing. It requires preparation, documentation, and underwriting readiness. Carriers are focused on risks that are organized, transparent, and proactive. So success starts with a strong pre-submission checklist, complete and accurate payroll, correct job classifications, ownership details, and operational descriptions. Those are going to reduce underwriting friction and help carriers evaluate risk efficiently. Equally important is a clear loss narrative. Underwriters want context, not just numbers. So explaining what's caused past losses, what corrective actions were taken, and how future claims will be prevented demonstrates accountability and improves underwriting confidence. A lot of times if I receive a submission and let's say the insured does have a claims frequency or severity problem and I get the loss runs, I see that there has been an issue with this insured. I know that the carrier is going to want more information either on a loss that was really large or if it's a frequency issue, what claims management has been put in place by the business owner to help prevent future losses. So going the extra mile and giving me that additional information up front is going to be helpful getting a quote back quicker to you because a lot of times the back and forth between myself and a broker asking additional information, it does take a lot of time and it can be the deciding factor between binding the account or not if the insured is looking for a quote quickly. So being proactive and getting the additional information up front when there is an issue in regards to claims is going to be really helpful along with the carrier. Potentially if there's a story on the claim or the frequency issue, being able to explain that to the carrier and explain the insured's position can open the door to a potential quote, whereas they may have previously declined. So return to work readiness is another critical factor. Documented transitional duty programs, early reporting protocols, and medical management strategies signal the ability to control claim duration and indemnity costs. Finally, a structured renewal countdown tool ensures nothing is left to chance. So starting the renewal process early, our agency does it approximately 90 days in advance, allows time to address loss trends. Let's say that there is going to be a X mod increase, update documentation, if there is a payroll change or location change, and position the account effectively. So getting ahead of the renewals, so there isn't any surprises, and being in contact with your insured about what's to come is going to make you successful in today's market. So in today's market, disciplined preparation and proactive strategy are what separate successful workers' compensation placements from the rest. Sharpening your underwriting skills, it means going beyond the application and truly understanding the premium behind the risk. Start by knowing the premium categories that influence underwriting decisions. So small premiums, of course, they're going to move quickly, but mid-range premiums often offer the best balance of opportunity and profitability. So that's where the carriers can be competitive and where underwriters can add the most value. As premiums increase, so should your level of analysis. So higher premiums, of course, are going to demand deeper underwriting analysis, from payroll accuracy and class codes to loss drivers and safety programs. These risks aren't just bigger, they're more complex, so understanding the operations of the business as if you are the owner is going to be your competitive edge. And finally, successful quoting today isn't about how many submissions you send. It's about how well you tell the risk story. Strong underwriting comes from clear data, thoughtful insights, and proactive communication. In this market, the best results come from underwriters who understand the premium, analyze the risk, and elevate the quote beyond just the paperwork. So telling that story to the carrier, to the broker, whoever you're looking to get the quote from, is going to be really important. So I wanted to highlight a few classes of business that are successful and should be targeted in today's current market where we are seeing good success. Professional services like clerical and consulting operations, they continue to be strong performers, of course, because they offer predictable payrolls, lower injury frequency, and clean loss profiles that carriers favor. Skilled trades, especially artisan contractors, remain attractive when properly managed, and that is the big thing to point out. So targeting artisan contractors that have experienced owners, stable crews, and strong safety practices are going to be the most important to highlight and can easily get you into that middle-sized premium category. So if you're writing clean, skilled trades, you're going to be successful. So being able to determine if this is clean business or if there is a story to tell and they're working their way towards that can be the difference between you and another broker. Hospitality and service risks, particularly franchise food services with experienced operators, can also perform well. Established systems, training standards, and proven procedures help reduce severity and improve underwriting confidence. And finally, retail stores, including electronics, mobile devices, apparel, jewelry, just to name a few. They offer manageable exposures with limited heavy lifting and consistent operations. So before we go, I want to provide you with some key takeaways from today's webinar. The California workers' compensation market is clearly shifting. We're moving into a more disciplined environment where carrier capacity is becoming increasingly selective. At the same time, rising medical costs, continued wage inflation, and increased litigation are all driving higher claim severity and putting pressure on underwriting results across the board. As a result, underwriters are changing how they evaluate risks. There's a much stronger focus on multi-year loss trends, an organization's safety culture, and the effectiveness of return to work programs. In this environment, success means changing the conversation. Workers' compensation can no longer be approached as a price-driven product. Instead, it needs to be positioned as a long-term risk management strategy that rewards proactive safety, strong claims management, and sustainable outcomes over time.
Great. Thank you, Darby. If anyone has any questions that weren't answered during the webinar, now is the time to chat them in so we can answer them before we sign off. And then after we do sign off, I encourage you to browse our website at cidinsurance.com. We have tons of tools for you in your office to use, including marketing materials, proposal templates, fillable application, and lots of recorded webinars on different lines of business and coverages. Also, don't hesitate to reach out to Darby after the webinar. She'd be happy to answer any questions that you have. And if you have any completed applications on file, you can start sending them over to the submissions email you see on the screen. So if we don't have any more questions, that will do for today's webinar. We appreciate you all joining us and we look forward to doing business with you. Have a great day.
Thank you, everyone.